Hi there, Derek Hagan here. I'm a financial therapist, financial planner, and life coach specializing in meaning in life, mindfulness, and resilience here with another meaningful money memo. Let's get to it. I spend a lot of time talking about interior finance. So, interior finance is important. Interior finance is the foundation upon which the rest of your personal financial life lives. I don't spend a lot of time talking about exterior finance. Exterior finance, this is the mechanics of money. This is the nuts and bolts. You'll often hear me say, all the exterior financial knowledge in the world is worthless if you're unable or unwilling to actually implement it. If it's on a cracked foundation, there's nothing you can do about it. But the reverse is also true. If you've got a solid foundation of interior finance, but don't know what you're supposed to do, well, that doesn't help you. So we're going to talk about this exterior finance today. And it's helpful to know what to do. Because if you draw a circle of all the things that you know, it's going to be some size. We probably think it's bigger than it actually is. But the circle of things that we don't know is going to be a lot bigger than the things that we know. Now you'll notice there's some overlap here. You might wonder, why would there be overlap between things I know and things I don't know? Well, the answer is there's things that you know you don't know. So, for example, I don't know what the heck space-time is. What was Einstein talking about when he talks about space and time being the same thing and it's a fabric and it bends? I don't know that. I know that I don't know that. I don't know what atoms and molecules are made of. I don't know how to fix a leaky pipe in my house. I know that I don't know these things. There's this other gigantic section over here of things that I don't even know that I don't know. I don't know these things. I don't even know that there's something to know. And this is where exterior finance comes into play. Some people just don't know that there are strategies and tactics and accounts and things available to them. So exterior finance then is you've got your money and you need to know what to do with it. And this is important. Let's talk about the 80-20 rule, Pareto principle, which basically says 80% of the benefit is done with 20% of the effort. And you see this everywhere. 80% of a company's revenue comes from 20% of its clients. Right? 80% of all language is done with 20% of the words. 80% of any skill is done with 20% of the actions. And so what we want to look for is the optimal strategy of 80% of the benefit with 20% of the effort, because then you don't have to worry about the rest. That last 20% takes a lot of effort that can be spent somewhere else. But if you don't know good exterior financial knowledge, you might be down here where it doesn't take that much more to get up a little bit. So good exterior finance gets you up a little bit. So exterior finance is made up of several things. Most people will think about investing or budgeting, but there's insurance, taxes, estate planning, in addition to investing and cash flow. There's a lot to this exterior financial stuff. So if we take a look at each of these individually, this is very, very high level. But cash flow basically says what money comes in, that's income, that's interest and dividends and so on, and what goes out, that's your outflow. So cash flow then is taking a look at what's coming in and what's going out. And if what's coming in is greater than what's going out, then we would call that a surplus. A surplus is good. A surplus buys you more options. You can increase your expenses now. You can increase your lifestyle now on purpose if you want to, not lifestyle creep. You can increase your savings, which buys you some flexibility in the future, or you can bring in less money. Maybe you can get a job that's not so stressful, or it's more of a passion job because you don't need as much money coming in. Now, the opposite, though, if you have more money going out than is coming in, then we call that a deficit. And a deficit is tough. A deficit has to be funded somehow, and it's usually funded through debt or through tapping into your savings. So cash flow is about managing the inflow and the outflow. Investing is basically about making your money work for you. It's about finding that fine line between the amount of risk, market risk, and other investing risks that you want to take on and how much return you can expect for that. Risk and return are the same thing. They're not really separate. There is no such thing as a lot of return without risk. And if you don't want to take risk, there's no return. If you want some return, you have to take risk. These things are very much connected. But in investing, this is where you're going to hear things like asset allocation, which is splitting up your investments over many different types of investments that lowers your risk. You're going to hear things like diversification, which is very similar. It's dividing up your investments into multiple investments. Insurance is really about managing catastrophic financial risk. So with insurance, this is something that you're thinking about that's probably not going to happen. These are events and things that are just, they're probably not going to happen to you. But if they happen to, it's a 0.0001 or something percent chance that it happens. So it's probably not going to happen. But if it does, if you're on the wrong end of that, it's going to ruin you. Examples of this. I'm probably not going to run over somebody in my car. But if I do, I'm going to be sued for a lot of money. My house probably isn't going to burn down, but if it does, that's tough. I'm out of all that money. I'm probably not going to break my leg, but if I do, it's going to cost a lot of money. I'm probably not going to die prematurely, preventing myself from making more income. But if I do, there's all that lost income. I'm probably not going to become disabled and have no ability to work. But if I do, I don't have any ability to bring in income. These things that probably aren't going to happen, but if they do, is where insurance comes in. So it's better to pay a premium to this insurance company. Some small monthly, quarterly, annual premium, which is a small known amount. And in exchange for that, they're taking the financial risk away from us. Right? So I pay them a little bit of money. And then if I have something bad happen in my car, they cover it. I pay them a little bit of money. If my house burns down, they cover it. Right? Estate planning, if you think about life runs from birth until death, estate planning concerns what happens here after death. What happens to your stuff? What happens to your children? Who makes your financial decisions? Who makes your healthcare decisions? That's what estate planning is all about. And taxes concerns this business of it's not what you make, it's what you keep. So what you make is now then only part of it. They call this gross. Net, you have to pay federal income taxes. Most people have to pay state income taxes. If you buy something, you pay sales tax. If you give a significant gift, you have to pay a gift tax. If you sell an investment for more than you bought it for, you have to pay capital gains tax. If you buy property, you have to pay property tax. And there's many other more nuanced types of taxes. So tax planning is about being smart about how and when you pay your taxes. Now, there are some rules of thumb that we can use. There's no one-size-fits-all advice, but there are some rules of thumb that we can think about. What should you use debt for? You might hear about good debt and bad debt. Good debt is when you're using debt for something called an appreciating asset. An asset is just something you own, and appreciating means going up. So an appreciating asset is something that's likely to go up over long periods of time. Things like this would be your house or the value of your education, your human capital. So it would be okay to finance those with debt. Bad debt is a depreciating asset. That's something that you buy that's likely to go down in value. That's everything else, basically. So they would say it's bad debt to buy a TV with debt, with credit. It's bad to buy a car with credit. Sometimes you might not be able to afford it, so that's why it's not one size fits all, but certainly a restaurant meal shouldn't be used with the credit card. Now, there are, when you think about going to college, college is very expensive. But remember, education falls under the good debt, so it's okay to finance with debt. This is good debt, but how much should you take? Right, so the rule of thumb says your max student loan should be tied to your first year salary. Right? Now, what this means is that it's tying into account, it's making this a business decision. So it's not a rule just that applies to everybody outright. You should never take more than 50,000 or 100,000 or whatever, because it totally depends on what you want to use that education for, which means $80,000 in student loan debt might be okay if you're going to be an engineer making $80,000 in your first year, but not if you're going to go to work for a nonprofit or become a teacher. So your student loans, you should try to limit that to your first year salary. And finally, investing, how much should I put in stocks versus cash and bonds? The rule of thumb is to take 100 and minus your age. So if you're 30, you take 100 minus 30, which would be 70% would go in stocks. If you're 60, 100 minus 60 is 40, so 40% would go in stocks. And what this does, it's not perfect, just like any rule of thumb, but what it does is it now ties the fact that you tend to want to have less money in stocks as you get closer to retirement. So understand that there are tactics and strategies out there. There's a lot of good information. There's a lot of good professionals you can hire. Exterior finance is important. It just has to rest on that solid foundation of interior finance. You get one life. Live intentionally. Greetings, Derek again. Thank you so much for watching. If you want to learn more, please head to meaning.blog, and there you can learn about all things related to money and mindset and purpose and meaning. And you'll be able to find out how we might be able to work together. You'll find more articles. You'll find links to videos. You'll find online courses, all kinds of things to get you going on your journey towards living more intentionally.